Very good afternoon, one and all. I welcome you all to today's webinar on how to face department audit under GST laws. We have a distinguished speaker, CA Sunil Gabhawala ji from Bombay. In fact, it was a time when if we had to listen to him, we had to go all around Bombay and listen to him. Today it is a privilege to listen to him live from Hyderabad itself. So it's really honored to have you here, sir. And with this brief introduction, I request our President CA Ramdev Bhutra ji for his welcome address. Over to CA Ramdev Bhutra.
Thank you, Ritesh. Good afternoon to all the learned and very distinguished personalities in today's session. First, I welcome our distinguished and most learned speaker, CA Sunil Gabhawala ji from Mumbai. I must say, he was kind enough to accord his consent at our first request itself. So we are really grateful to Gabhawala ji, despite of such a heavy schedule and busy time. As a practicing fraternity, we all know how we are facing. Without staff, we are doing everything ourselves. And particularly in city like Bombay or Mumbai, what is now called, lot of problems are there. Vis-a-vis traveling, commuting, everything. So, Gabhawala ji, we are very grateful to you for your kind consent. And the topic which we have chosen today is really unknown to us. Then how we have selected this topic, there is a little issue beside this, sir. Some of our members have heard you somewhere on this topic. And after listening you, they were recommending that you must be only invited to this topic. Have you still spoken to Gabhawala ji and sought his consent or not? So they were so much impressed with your lecture on this topic elsewhere. So actually, frankly speaking, none of us are aware so far. What is this departmental audit? I think it is inspection. Another name given is audit also. So we must be equipped ourselves in practice so that we can advise our clients how to face, because they are the first person who are facing the department people. So friends, this is the topic which we will be deliberating today, which is of very highly importance in coming days. If not immediately now, anytime from now on, we can have this situation of facing departmental audit. So with this brief about topic, I request all of you who have not yet obtained membership of Tax Bar, please join in. And I would like to share in the beginning itself our forthcoming programs. On Saturday, 26 September, tomorrow, we have another meeting on topic issues in tax audit and documentation to be addressed by CA Pramod Jain sir from Delhi, who is Central Council member ICAI. Then we have a meeting on Saturday, 3rd October 2020. Topic is intricacies in taxation under Section 115 BBE and penalty under Section 271 AAD. 271 AAD, as you know, it is a totally new thing in Income Tax Act for wrong entries, false entries in books of accounts. Speaker is CA Dr. Girish Ahuja sir from Delhi on this topic. Then we have a meeting on Saturday, 10th October 2020. Topic is issues in input tax credit and block credit under GST. Speaker is our own good friend CA Rajat Gurnani from Noida. Then we have a meeting on 14th October 2020. It is a rescheduled meeting. Actually, this meeting was originally scheduled to be held on 2nd October, but due to some reason, it is rescheduled to 14th October 2020. Topic is issues in taxation and transfer of shares through various modes. Speaker is CA Pinakin Desai sir from Mumbai. Then we have a meeting on 17th October 2020. Topic is to be addressed by speaker. Sorry, I have not noted down details here. I will share with you later after the session. Then we have a meeting on 21st October. It is a Wednesday. Topic is law of evidence and burden of proof in tax proceedings. Speaker is Advocate Muthu Abhirami from Chennai. And the 17th October meeting I will share it during the course of our session today itself. Here, I have you very well to know this topic. Thank you very much. Over Ritesh.
Thank you, CA Ramdev Putraji, for your welcome address. Before I ask our session chairman, CA MM Pallodji, for his opening remarks, I would request our GC member, TN Reddy sir, to introduce our speaker, CA Sunil Gabhawala. Over to our GC member, TN Reddy ji.
Thank you. Very good afternoon, the respected Chairman, MM Pallodji, past President, respected Speaker, CA Sunil Gabhawala ji, respected President, Vice President, fellow members, ladies and gentlemen. I welcome you all to this today's seminar on how to face departmental audit under GST law. It is my pleasure to introduce Sri CA Sunil Gabhawala ji to this August gathering. Sunil ji is a chartered accountant in practice with third rank at the All India level. He is also a cost accountant. He has an excellent academic record with ranks throughout the career. Sunil ji started his career in indirect tax practice in the domain of the sales tax law. In the early days of his career, he helped his clients transition from the sales tax regime to the VAT regime. As a logical extension, he diversified into service tax practice. His comprehensive treatise on service tax law, published by the Bharat Law House, saw 23 editions. Sunil ji has been actively involved in the policy formulation process of GST and keenly follows the developments in regard to this emerging law. His YouTube channel contains various videos on this topic and has garnered more than 60,000 views. He mentors a pan-India community of indirect tax professionals on the front of GST implementation. Throughout his professional career of more than 2 decades, Sunil ji has led his firm to provide enhanced quality service offerings on the core principles of knowledge, integrity, and speed, leaving behind an indelible mark in each client interaction. His firm has been ranked as one of the top 10 GST consultants for the year 18-19 by the Insight Success magazine. Sunil ji has delivered lectures on topic of professional interest at various industry trade bodies. He is a NACIN accredited trainer and regularly conducts training sessions for the departmental officers. He has also written articles in various professional and business journals and is regularly quoted in newspapers on indirect tax related issues. Sunil ji was the president of the Bombay Chartered Accountants Society for 1890 and is currently the chairman of the Indirect Tax Committee of the said society, and is also a member of the study group constituted by Maharashtra government for implementing GST. I am very much thankful to the organization and organizers as well for giving me this opportunity. Thanks to one and all. Now I hand over the podium to the secretary.
Thank you, T.N. Reddy ji, for introducing our speaker. Now, before I request our distinguished speaker, CA Sunil Gabhawala ji, to address the members, I request our session chairman, CA M.M. Pallod ji, for his opening remarks. Over to CA M.M. Pallod.
Dear friends, good afternoon. This being the Golden Jubilee year of the tax bar, and we have a series of wonderful lectures on different topics, company law, income tax, GST. And today we have selected very good subject, how to face departmental audit under GST. After the introduction of GST, now 3 years, 2 months are about to lapse. So clients have started receiving GST audit notices. So one must know how to face the audit. And today we have a very learned speaker with us who will make us to travel how to face. Section 65 of the GST Act provides for specific audit. The commissioner or any officer authorized by him by way of general or specific order may undertake audit of any registered person for such period or at such frequency and in such manner as may be prescribed. The period of audit to be conducted under the GST should be of a financial year or multiples of financial year as per Rule 101 of the GST Act. What is audit as defined under Section 2, subsection 13? That audit means the examination of records, returns, and other documents maintained or furnished thereunder to verify the correctness of the turnover declared and taxes paid thereon, input tax claimed by the taxpayer, and followed compliance with the provision of the law. The audit officer has to give minimum advance 15 days notice before the start of audit. And what is expected from the SSC? The SSC should provide all the reconciliation statement, cash book, bank book, then input tax credit ledger, output tax ledger, then trial balance, bank statement, challan copies, then financial statements, stock records maintained which are prescribed under the GST Act. The audit officer, after his audit, first has to share his findings with the SSC, with the registered person, and the registered person has to give his on what basis he has claimed all the inputs, outputs, wherever the queries are there or observations of the officer there. The audit officer, before issuing show cause notice, has to consider the reply filed by the SSC before issuing show cause notice, and the audit officer has to pass his order within 90 days from the start of the audit, from the date when the SSC or registered person provided all the documents. So in wherever if commissioner feels, he can extend the date by another 90 days. And there is a provision under the GST to have a special audit under Section 66. That is where if the audit officer is of the opinion that it requires detailed exam where there is a evasion or input tax claim is not normal, then with the permission of the commissioner can have a special audit to be conducted by a chartered accountant or cost accountant. So what are the records that are on the basis of which the registered person claim? He has to keep all those records very perfectly when he file monthly returns and all that. So today we have a very good speaker who is a very learned speaker. He will throw light on it and how we professionals can face this audit and how we can prepare our clients to face this audit. So I will not take much more time. So I will request Ritesh to take the proceedings from here.
Thank you, Pallurji. Now I request our speaker, CA Sunil Gabhawala ji, to address the members. Yes, sir.
Thank you, Ritesh. Thank you, Ramdevji, for inviting me to this session, and thank you, Pallurji, for a very nice, succinct introduction of the topic, summarizing the key aspects and setting the ball rolling on this entire aspect of department audit. I will like to share a presentation, and maybe we can walk through that presentation over the next 45 to 60 minutes. And once that is done, thereafter we can take up questions from the participants. Is my screen visible to you all?
Yes.
Yes, sir.
Yeah. So in the opening remarks, Ramdevji highlighted that must have heard my talk on this topic, and they were impressed by the talk. And I was a bit surprised because this is the first time I'm talking on department audit to a professional forum. Maybe the participants might have heard me on GST audit, which is basically your Form 9 and 9C. And yes, I have spoken very frequently on that. But when Ramdevji told me that if you can speak on department audit, I thought that it's a good opportunity to really go through in detail the provisions of department audit and maybe even share some of the experiences from the erstwhile service tax audit which we were facing. And therefore, I took it as as an opportunity to take you through the concept of department audit. And in the process, I think we will also be enlightened through the entire thing. But just as a caveat, this is the first presentation that I am doing on the department audit, and there has not been an early presentation on this issue. The second aspect was Ramdevji highlighted about the concept of inspection. How is this department audit going to be functioning? Is it something like inspection or things like that? And that's where I think we will have to really set the context. And of course, even from the department side, we see that there are lots of overlaps in the provisions and in the implementation of those provisions. And therefore, before I really deep dive into section 65, I thought it may be important to set the context of today's discussion and also to delineate the scope of the department audit under section 65, which we are going to talk about today. So essentially, if you look at the GST law, typically the law, any tax law today works primarily on the concept of self-assessment. The assessee is expected to pay the taxes regularly, and he has to file the returns disclosing the correct nature of the transactions and satisfy the correctness of the taxes paid. Having said that most of the tax laws, or rather all the tax laws today work on a voluntary basis, there is always going to be a policing which is required, because if the trade is left for themselves to do the compliances, it's very likely that there will always be pockets of industries or trade which will like to evade the tax. And therefore, every tax law will also have various alternate mechanisms to ensure or ensure compliance, and also to satisfy the government that the compliances are correct. When you look at the GST law, I could broadly see three different distinct sections or chapters dealing with three alternative approaches towards a satisfactory compliance on the part of the government, a satisfaction on the government that the compliances are correctly done. I think the first set of provisions are enshrined in chapter 12, which talk about the assessment of taxpayers. Now, this assessment of taxpayers is something similar to income tax assessment, which we have under section 143(2), wherein you have filed a return, the assessing officer at his desk will go through whatever you have filed and try to comfort himself that whatever you are doing is correctly done. And for that, there are various subsections or methods under chapter 12 through which there can be an assessment by your jurisdictional officer. And this is typically undertaken by your jurisdictional officer. So what are those provisions? You have section 59, which is the starting point, which talks about self-assessment. The GSTR 3Bs and the GSTR 9Cs filed by you become an important part of this section 959, which deals with self-assessment. In case you are not able to define your tax liability correctly, you can apply for a provisional assessment. In that case, voluntarily, you will say that I am paying ad hoc taxes, and the assessing officer will assess you under the provisional assessment provisions of Section 60. The returns which you have filed can be scrutinized by the officer for self-consistency and certain apparent adjustments or credit claims which apparently may be incorrect. That would be the provisions of scrutiny of returns. If you have obtained registration but not filed returns, then there's an ex parte assessment after notice and after due process, which will happen under Section 62. If you have not obtained registration, but the department is of the view that you are required to register, then they can forcibly assess you for the URD period, unregistered period. That will be under Section 63. And if you are likely to run away from the country, or if there are assets which you are likely to dispose of, and the assessing officer is comprehending that there needs to be a protective assessment, then he can undertake an interim protective assessment under Section 64. So these, if you look at these provisions, these are typically provisions which deal with assessment of returns or numbers which have already been filed by you. As compared to, and these are typically less intrusive. As compared to that, we have an extreme intrusion under Chapter 14, which deals with investigation, where the authorities will barge into your offices or your business places and will undertake an inspection, search, or seizure. Or if they find that something is amiss, they can even arrest you. There will be a power to summon you under Section 70 and obtain a statement and try to take a confession from you. All those powers are contained in Chapter 14. And there's an interesting power under Section 68, wherein the field formations can intercept goods while they are in transit and check for the correctness of the e-way bills. And if those correctness is not there, then the procedures under Sections 129 can be initiated. So essentially, if you look at Chapter 14, there you are basically, there's a lot of barging in involved, and there's a lot of intrusiveness into the entire process. Now, when you look at and compare these two extremes, the assessment, which is typically a desk job at the department officer's table, and compare it with investigation, which is essentially intruding into the business operations and the business places, you find that audit is somewhere in between. It tries to balance a little bit of an office work as well as a little bit of a business premise visit. And that's where I think the audit provisions become very important for the purposes of our discussion. The audit provisions are there under Chapter 13, and two special types of audits have been talked about. Section 65 dealing with the department audit, and Section 66 dealing with a special audit in special circumstances. We will not be talking about the special audit, but we'll be talking only about the department audit. Now, when you are looking at all these provisions, you also have to bear in mind that there is a Section 71 which grants access to the assessment, investigation, and the audit authorities to your business premises. So somewhere there is a little bit of an overlap in Section 71, which permits access to the business premises. However, the roles of each of these authorities are very, very separately defined and identified. So for example, when you look at audit, there is a definition of the word audit itself under Section 2. And when you go through that definition, what comes out is very clear. While the objective of the department audit is to correctly assess the tax liability, the scope and the focus of that assessment is based on the records and the documents which have been filed and the financial statements. So it is again in that sense more a sort of a post-mortem, a post-transaction review as compared to investigation, which is expected to be much more intrusive and on a real-time basis. Of course, each of these different sets of actions, if at all there is some default in payment of tax, if it gets resolved at based on generic discussions, it is fine. If it does not happen, then ultimately the raising of the demand and finalization of demand goes under Chapter 15, and it's a separate provision by itself, wherein through the process of the issuance of a show cause notice under Section 73 or 74, the legal proceedings will begin, and thereafter your jurisdictional proper officer will step into the shoes and he will review the show cause notice, review the submissions made by you, and then finally come at a balanced and a legalistic view on whether the demand is sustainable or not. If it is sustainable, then you enter the appellate procedure. So this, I think, is the broad framework and the context in which we have to look at the audit process. And the audit process typically starts with the initiation of the audit, which we will go into in the next slide, and ends at the issuance of a show cause notice or issuance of a clean final audit report. And that's where the audit process would typically end. What are the broad provisions which we intend to look at? From the Act perspective, statutory provisions, I think three important provisions. Section 65, which primarily deals with the power of the commissioner to impose an audit on a general basis or on a special class of taxpayers. What exactly is the scope of audit is defined under Section 213. Many a times we've seen professionals confuse this definition of audit under Section 213 along with the Section 35 GST audit, which according to me is incorrect. Section 213 would apply only to Section 65, which is a departmental audit. It would not apply to an audit done by a chartered accountant wherein he is submitting a Form 9C, which in my view is primarily a reconciliation certification and not an elaborate audit as we generally understand. And of course, Section 71, which talks about the protocols for the access of the audit party into your business premises and their responsibility to provide the records and the information at that stage. We also have Rule 101, which is a subsidiary rule to Section 65, which defines the timelines and the procedures in which the in which the department audit will be conducted. And the Director General of Audit has come out recommend you to go through this GST audit manual, which is around 100 pages and which very nicely and succinctly tries to bring out various aspects of how the GST audit will be conducted. So these are the three broad blocks of discussions which we will be trying to intermingle into and one by one. Of course, of immediate priority will be a discussion of Section 65, and thereafter we will go into the procedural side of it, and then we will look at the strategies of how, as a tax professional, we will be handling this GST audit. So without much ado, let's straight away go to Section 65(1). This section, my chairman had highlighted it in his preliminary remarks. I will again go into it into a little bit detail because there are a few issues which we need to discuss in this. The verbatim wordings of Section 65(1) would suggest that a commissioner or any officer authorized by him, by way of a general or a specific order, may undertake audit of any registered person for such period, at such frequency, and in such manner as may be prescribed. Friends, when you look at the Act, I think this provision is very clearly highlighting the broad concepts which might come up in this entire provision. And it is a self-contained code in itself, while it does give empowerments at various provisions. And we all understand that when you are looking at a provision of a law, the provision of the law will have to be first given an importance, and every other authorization would have to.
Yes, sir. Please continue. Sorry.
Yeah. So every other provisions will have to somewhere draw the power from this enabling provision. And unluckily, we find that in GST law, we have at various scenarios where the cart is placed before the horse. We jokingly say that the finance minister first gives an interview on a CNBC or any television channel. Thereafter, there is a press release. Thereafter, there is some notification. And thereafter, they try to find whether that notification was under the authority of a law or not. And if not, then they amend the law. And we've seen that happen very frequently. When you come to department audit, we may perhaps find something similar. And let's try to understand this. The Section 65(1) says the commissioner or any officer authorized by him. And then I tried to find out whether there is, when they talk about the commissioner, what do they mean by this word, the commissioner? There's already some interpretation of this phrase, the commissioner. And for various sections, we are told that the commissioner basically will mean the commissioner in the board in the ranking of the revenue secretary. Which commissioner will approach you? Which commissioner will audit you? To address that, we have issued a notification 2 of 2017, wherein the Director General of Audit a specific position has been identified, and then territorial jurisdiction has been given to various commissioners of those jurisdictions. So far, so good. So there might be a commissioner in Hyderabad or a commissioner in a particular city, which will be authorized through this notification 2 by 2017. But that does not stop there, because it's not going to be just one commissioner who can actually go about doing all the audits in that particular city. And that's where section 65(1) says the commissioner or any officer authorized by him. Therefore, the law envisages a delegation of power from that commissioner to officers below him. Now, how can this delegation of power happen? In my view, that delegation of power also has to happen either through a notification or through an order. And that order has to have the sanction of the board. Unluckily, we do not find any such type of a specific authorization for an officer. So when a deputy commissioner or an assistant commissioner or a superintendent team comes out for an audit of a taxpayer, because it's not going to be the director general or audit who's going to come for each and every audit, there is perhaps some element of open-endedness in terms of the authority of those people to really request for information and to conduct an audit. We'll park this point and we'll revisit it towards the end of how we want to really look at it. But yes, there appears to be some issue over here in terms of an appropriate notification or an order being issued to authorize the subsequent lower level people in the hierarchy to conduct the audit. Like, for example, when you look at adjudication, we have defined monetary limits and said that depending on the amounts involved, it will be either the assistant commissioner or the deputy commissioner who will be undertaking the adjudication process. Something like that would be required over here, which apparently is missing as of now. And that itself could become a stumbling block in this entire process of operationalization of the department audit by the GST officers. Of course, we will walk this bridge in specific cases as and when the things happen. Going to the next point, the commissioner or any officer authorized by him by way of a general or a specific order. Now, what will this order do? This order ideally will define the class of registered persons or the names of registered persons. So if it's a general order, it will have to define the class of registered persons. And if it's a specific order, it will define the specific taxpayers' names who will get audited under the provisions of section 65(1). Again, we've seen in Bombay, at least, we've started receiving GST audit notices. We'll talk about the ADT1 notice which comes up in this entire process. But we have not seen any enabling general or a specific order. Of course, this can be an internal administrative order, not in the public domain. But at what point of time can a taxpayer request for a general order or a specific order, and whether it has been actually done by the Director General of Audit? These are questions which we will have to examine when we come to the jurisdictional aspects at a later point of time. Be as it may, the provisions of section 65(1) says that the commissioner may undertake audit of any registered person. Now, because of this use of the word may, as tax professionals, we understand that the word may provides an element of discretion in defining the set of registered persons who would be audited. And there have been guidelines which we will be talking about in the next slide of how this discretion will be exercised. It's very clear that the 60 lakh assessees which we have in the country, it will be difficult or rather impossible for the department to audit each and every assessee. It will therefore be a selective basis of assessment, and that selective basis will involve a discretion, and that discretion is ingrained in section 65(1) when they use the word may rather than the word shall. So it's a discretion, and the selection criteria will come to in the next slide. May undertake audit of any registered person for such period and at such frequency and in such manner as may be prescribed. And that's where rule 101 referred to by the chairman will come into place, and we'll go into that rule also in some time. So that is section 65(1), which is the root or the enabling provision for the department audit. Thereafter, we have some further subsections to section 65, which somewhere tries to articulate in a little bit detail of how this audit will get conducted. So firstly, we are told subsection 2 says the officers may conduct the audit at the place of business or in their office. So there is a combination, as I highlighted in the first slide, there is a combination of both an intrusive method of investigation as well as a back office function of reviewing the data and the documents. Exactly where what role will come, we will go into in detail when we go to the GST audit manual and the discussion thereabout. Subsection 3 says the registered person shall be informed by way of a notice not less than 15 days prior to the conduct of the audit in such manner as may be prescribed. We'll talk about ADT 01 over here. There is a timeline for completion of audit. We are told that once the audit is initiated, then within 3 months it has to be completed. There is an explanation and a proviso to this subsection 4, which basically defines what is meant by the date of commencement of audit, which is basically the submission of all the information which is required. Perhaps that gives a little bit of a leeway to the officer to say that some information was not received and therefore my 3-month period has not initiated. In any case, once the commencement of audit happens, the officer is expected to complete the audit within 3 months, and this period can be extended further by 6 months by the commissioner on a specific case-to-case basis. Thereafter, subsection 5 says that during the course of the audit, the officer may require the registered person to do 2 things. Now, this will be a subject matter of a detailed interpretation at some point of time. To afford him the necessary facility to verify the books of accounts or other documents. So you might be required to give him a desk, you might be required to give him a conference room, you might be required to give him an access to your ERP. All of that comes within this subclause 1 to afford him the necessary facility to verify the books. And the second requirement is to furnish such information as he may require and render assistance for timely completion of audit. Now, furnishing of such information as may be required, there is a very detailed guidance under the GST audit manual of what should be that information which should be required and what is the scoping of the calculation of that information. We'll come to that a little bit later. Subsection 6 says, on conclusion of audit, the proper officer shall within 30 days inform the registered person whose records are audited about the findings, the rights and obligations, etc. And thereafter, where the audit is concluded results in a detection of tax not paid, the proper officer may initiate action under section 73 or 74, that is basically issue a show cause notice. And this is the end of the process of the audit. Thereafter, the executive commissioner will take over and thereafter there will be an adjudication process. So this basically is the self-contained code of section 65, wherein we are talking about what are the statutory provisions for the coverage of audit. Now, as I was highlighting, one of the important aspects under section 65 was that it is a discretionary audit. And in the GST audit manual, they have defined the selection criteria of how a particular taxpayer will be selected for the purposes of the GST audit, for the purposes of department audit. And what they have tried to do is they are saying that the selection will be based on a combination of a risk-based criteria and a theme-based criteria. There are a parameter around 15-20 parameters which they have identified in the risk-based selection. And if your facts in the GST returns filing or your conduct suggests that there is some element of risk involved in terms of the tax evasion, then you might get selected under the risk-based selection. And then department can also do a theme-based selection. And this theme-based selection can be either based on the third-party data or based on an industry selection and those types of themes. So typically 20% of the selected cases may be based on the theme-based selection. 80% will be based on risk-based selection, which would also include some randomized selections. When we are talking about all of this, we are also talking in the GST audit manual that there will be certain set of accredited taxpayers for whom they will not come every year for the purposes of departmental audit. There will be a deferment and maybe they will club 2-3 years together and club those 3 years and do a deferment of the departmental audit and conduct it at one go for 2 to 3 years. Of course, they have still to identify those list of accredited taxpayers. And this typically is a back office job of the department of how they end up selecting a particular taxpayer. Of course, all of these processes will be important when somebody is going to challenge the proceedings before a higher court. And at that time, while the taxpayer by as a matter of right cannot demand all this documentation to suggest appropriate and a scientific selection of the taxpayer for the purposes of audit, if the matters go to the court, I am sure the judiciary can demand the back-end documentation, and if this process is not followed, in that case, the entire process can be struck down as violating the principles of natural process of justice laid down by the the GST audit manual. So that is again an important aspect which will come up as time progresses. Not going into the jurisdictional and the legal aspects of the GST audit, assuming that it is valid, what are the steps involved in the GST audit? And I could call out 5 broad steps from the GST audit manual. The step 1 is the taxpayer profiling, wherein the basic data of the taxpayer is filled up. Thereafter, the audit team, which has been defined by the government itself, will do a desk review of the taxpayer profile and the data available already with him. Based on the desk review and the taxpayer profiling, the audit team will prepare an audit plan. This audit plan has to be approved by the Director General and the Additional Director General. And based on their blessings and their approval of the detailed audit plan, the audit verification would take place. And based on the observations of the audit verifications, we will finally lead to an audit conclusion, either in terms of the submission of ADT 02 or a show cause notice, or both perhaps. So that these are the broad 5 steps which are involved, and we'll go into the roles and responsibilities of each of these steps one by one. When you look at, and when we go into these steps, and when you go to the GST audit manual, what you will find is that a major part of the activity specified in this entire audit manual is expected to be done by the audit team. Now, what we practically see, and when we go to the strategies towards the end, we'll again come back to this issue. What we practically see is, in many cases, the audit teams merely act as data compilers or courier guys. They send you the annexures, they send you the the blank forms. They expect the taxpayer to fill all this up and submit it back to the audit teams. Practically, maybe yes, that's the way we will go about doing it, but theoretically, legally, that is not the right approach. All these documents are expected to be filled up by the audit officers, by the audit teams, and the taxpayer is only expected to supply records or supporting documents as may be required. And we'll come to that, and onus of preparation of the data, and that too data which is already available versus data which is not available, how to go about doing that. We'll talk about all of that, but just bear this aspect in mind, that when you go through the audit manual, you will find that most of the onus and the responsibility has actually been cast on the audit team. And essentially, practically what happens is all that responsibility is shifted onto the taxpayer. So now when you look at the taxpayer profiling, the first step in any GST audit process after a taxpayer has been identified and an audit team has been associated to the taxpayer is a back-end work by the department. And that back-end work is filling of GST AM1. This is a basic taxpayer profile which has to be filled up. You must have seen that the clients would have received this document by email or informal means, and you would have been told to fill it up. But essentially, this document has to be filled up even before the department approaches you. The department approaches you by communicating the initiation of the audit in ADT 01, and GST AM1 is expected to be done before that in terms of the stepping and in terms of the basic processes. So essentially, this GST AM1 annexure is to be filled up clearly by the department audit team and not by the taxpayer. Now, at some places, this may become important because some questions here are a little bit tricky. And then someone might say whether my responses to those questions can result in presumption of suppression, presumption of submission of incorrect information. Responses to all of those legal questions will be based on what is the scoping and the onus of preparation of this documentation. So if you look at GST AM1, it has 3 parts. Parts 1 and 2 contains basic taxpayer information, name, address, principal place of business, etc. Bank accounts, all of this. And if you really look at the GST master data, registration data, all of the information called for in parts 1 and 2 is contained therein. So typically this information is ideally available to the audit teams because the GST data is available to them. Part 3 deals with the summaries details of supplies and taxes for the past 3 years. This information again is nothing but a summary information, and ideally this is available from the GSTR 1s and the GSTR 3Bs already filed by the SSE, and it is available from that process. So that is the background, that when you look at these parts 1, 2 and 3, the data which is expected here is there in the GST portal itself, and the audit team is just expected, once they identify that one Mr. XYZ and company is their target of the GST audit to be done, they are expected to go to the GST website and obtain this information and fill up the GST AM1. In fact, there is a process wherein they have already created a portal internally, which is known as the TAG portal, Taxpayer Accumulation Group portal, where all this information is already ready made to a large extent, and only some basic verification has to be done in terms of the compilation of the data. But unluckily, most of these audit teams are not inclined to log in into that portal and download these documents and review those documents before they want to. They find it's much easier to send a blank document to the taxpayer and expect him to fill it up and start chasing him that why are you not filling up, and then start shouting at him. But that's, I think, the first part, filing of GSTM1. Once that is filled up, thereafter, they are expected to issue an intimation of commencement of audit to the taxpayer in ADT 01. There will be a list of documents which have to be submitted, and they have to give a clear notice of 15 working days, as we already saw under section 65, for the purposes of commencement of the audit. So that is the intimation which comes in ADT 01. Once that happens, step 2 starts, which is the desk review. Now this entire step has to be undertaken by the GST audit team, department audit team, sitting in their offices, or now because of the virtual working, maybe in their homes. They are not expected to reach out to the SSE except for the call of documentation. But all this background work, preparatory work, has to be done by the audit teams. What they are expected to do has been articulated in the audit manual. What it says is analyze the information in the annexure, call for documents as per GST annexure 3. So there's a very specific annexure which lists down the documents which have to be called for. And it's not a very complicated statement. The list talks about your standard documents like your annual report, P&L, balance sheet, notes to accounts, trial balance, cost audit report if applicable, tax audit report, and your TDS statement in Form 26AS. So these are the documents which, along with the ADT 01, the audit team is expected to call from you. Now, when they call this information from you, in the annexure, there's a detailed guideline on how the officer will review these documents. Now, that has to be done by the officer. They have to actually pick up their annual report, pick up some information from that, look at the revenue from operations, try to compare it with what has been already filed with the 3B. Now, all of this has to be ideally done by the officer. But what they do, they expect you to do it, and they expect you to give a reconciliation statement, which ideally is expected to be done by them, and keep an unreconciled information ready, and that unreconciled information will come in the next step, so that they are doing a focused investigation or a review. So that is the testing of incomes and exemptions, because your GSTR 3B will show the exemptions claim. So you will test your incomes and exemptions as per the documents which have been received, and prepare a pseudo reconciliation. And wherever there are doubts, maybe park those doubts, prepare those things in the place, so that when the next step of actual audit verification happens, you know what to ask. That is what they are trying to highlight. At this point, the one process which the audit manual highlights is reconciliation of input tax credit. And there's a very interesting discussion in this audit manual, wherein they are talking about the reconciliation between GSTR Form 3B and 2A. So the input tax credit claimed in 3B versus 2A, and all of us know the rigmarole which has been created, and the subsequent insertion of Rule 36(4), and the types of letters and investigations which have come in. And when I read the GST audit manual, it in fact gives me a big ray of hope. If you refer paras 5.5.4 and 5.8.3 of the audit manual, it highlights what to do if there's a difference. It highlights 2-3 things. It says, firstly, 3B versus 2A reconciliation should be done by the audit team, not by the taxpayer. And when they do that reconciliation, and if they find that there are transactions in 3B which are not reflected in 2A, in that case, they should keep this information ready. And for these types of transactions, they expect the audit team to verify with the supplier end whether the tax has been paid or not. Friends, please note, it doesn't say that because there is no matching, therefore you have to pay the tax. It says the audit team should inquire where the supplier's end whether the taxes have been paid or not. And it leaves it open-ended at that point. Perhaps this is something which can be helpful when we face certain investigations or certain queries in other areas as well. Thereafter, there is at their desk, they are also expected to do certain ratio analysis. Ratio analysis is basically input versus output in terms of supplies, in terms of taxes, export versus total turnover, and various other types of ratios have been indicated under this annexure 4. They have to look at those ratios and see whether those ratios perhaps suggest some tricky trends to watch out for. So, for example, if your input tax credit ratio is higher, much higher, then maybe that might be some area of a detailed investigation, an indicator of an investigation. That is how the ratio analysis under the annexure 4 comes in. Then annexure 5 talks about reconciliation of third-party data, which is already available with them, like the e-way bills data available on the NIC portal, along with the GSTR1 data. Again, this will result, when the audit teams do all of this, it will result in identification of possible areas of investigation or audit. And thereafter, we are talking about revenue risk analysis based on industry reports. So they might look at your GP ratio, compare it with the GP ratio of the average in the industry if there are available data, trends on that. And finally, look at the periodic trend in your own tax filings. So based on all these reviews, they are expected to do all these reviews sitting at their desk on their computers and identify critical points of how the audit will be conducted. It's not going to be like each and everything will have to be looked at, but they will have to define an audit plan. And that is the next step number 3, which is defining of that audit plan based on the taxpayer profiling and the desk review. The audit team is expected to prepare an audit plan. Friends, please note, up to here, they have, as far as the taxpayer interface is concerned, they are giving you ADT01 and they are expecting certain documents from you to be submitted to them. Beyond that, you are not expected to do anything. Based on all of this data and analysis, which is done by the audit team, the audit team has to prepare an indicative audit plan as suggested under Annexure 7 and identify the critical areas, plan out how they want to go about doing it, what is the extent of sampling. All those things has to be done in the format of the annexure mentioned under Annexure 7. It has to be internally reviewed by the additional commissioner and he has to then approve that audit plan, and only post the approval of the audit plan, we go to the next step of audit verification, which is where the audit team will come to your premises and actually start looking at a transactional review. So that is a step 3. Once that is done, then you go to step 4, audit verification. And that audit verification might happen partially at your location and partially at the location of the assessing officer itself. What they are expected to do is, firstly, they are expected to review internal controls depending on the size of the organization. And as auditors, we all understand this basic process of internal controls. They are guided that you should walk through the specific representative transactions. There's a detailed annexure 6, which gives a process of how the walkthrough should be done in terms of the flow chart, what type of documents should be obtained, what type of questions should be asked. And they've classified in this annexure beautifully the various steps in terms of walkthrough of inward supply transactions, outward supply transactions, inventories and stores, tax accounting done, and if there are job work transactions, how should you walk through those transactions. Thereafter, there's a questionnaire which he is expected to fill up, which includes a lot of pertinent questions, and those questions ideally is expected to take an interview of the taxpayer, and based on the responses of the taxpayer and the documents, he is expected to fill it up. That questionnaire is somewhat a transition from the service tax excise audit provisions, which had these sections, and it has been customized for the GST law. It typically includes the general taxpayer information, how invoices are raised, what are the processes therein, how accounts are maintained, records are maintained, how are the returns filed on a monthly basis, how is the place of supply determined, how is value determined, and then what are the internal MIS control provisions regarding the GST law. So that questionnaire has to be filled up. Thereafter, there's an ABC analysis of important transactions to be done. And based on that, there would be a transactional and documentation verification. And as they keep on doing this document verification, they might come out with instances of non-compliances or evasions, or either intentional or through error. What has been provided in the rule 104 is that there will be maybe an interim communication of these shortcomings, or he can give his responses of what according to him is the correct version of that entire process. And based on that, finally we reach the maturity stage, step 5, which is relating to the conclusion of the audit. So based on the interim communication of the observations and the findings and the responses of the taxpayer, the officer is expected to prepare a verification report, which is in Annexure 8. Based on this verification report, a draft audit report has to be placed before a monitoring committee. So the audit team himself cannot take a decision on issuance of a show cause notice. It has to go before a committee of commissioners, which is the monitoring committee. The monitoring committee will debate on the observations in the draft audit report and then give its in principle approval or rejection of whether these audit observations are correct or not. Based on that, a final audit report is to be issued, and this final audit report has to be communicated to the assessing assessee, the taxpayer, along with a conclusion of audit communication in ADT 02. Now, if there are any open-ended points which they have communicated and you don't agree with them and therefore you have not paid taxes, then necessarily 73, 74 processes of show cause notice will start up for this entire process. So that is where your audit typically gets concluded. Friends, as you must have seen, this is an elaborate process and there are certain timelines mentioned, and we talked about those timelines earlier. But I think there are quite a few open issues which we had parked throughout our discussion. I'll quickly take you through those open-ended positions and conclude my talk, and then maybe we will open up the floor for a few questions from the participants. The open issues primarily deal with, firstly, the jurisdiction of the audit team. Friends, walk back 3 years and the merits of subsuming various taxes into GST. And one important stated objective was there will be no duplication of assessments or proceedings. And therefore, way back in 2017, all taxpayers have been assigned either to the state or to the center. Now, of course, it was a lot of discussion which happened at that point of time. But later on, we've seen that at various scenarios, even though a taxpayer is assigned to a center, the state authorities will do some type of investigation. Or if it is assigned to the state, the center will do the investigation. Now, this type of jurisdictional issue goes to the core of the entire provisions. And therefore, it may make sense to identify whether, when you get a notice, whether the person who has issued you a notice has, first of all, a jurisdiction in terms of the central tax authority or the state tax authority to really assess you or investigate you. I think that's an important first starting point. Second aspect is, even assuming that he is in the right authority, either the center or the state, we talked about the fact that the audit has to happen through a general or a specific order. Maybe at appropriate times, if required, depending on the specific facts of the case, we may want to question whether there is such type of an enabling order and whether that order also authorizes officers at the ground level to really undertake the audit. So these are some fundamental questions of jurisdiction, which depending on a specific type of the audit you may want to raise. The second strategic issue which comes up is, especially in today's scenario where you find that cases of corona are increasing, how to go about interactions. Should we choose a physical interaction or should we choose a virtual interaction? And typically there's a CBSE circular also which talks about a preference towards a virtual interaction. Our experiences with state authorities are a little bit different. They are not very keen on virtual interactions and they want physical interactions. However, this being an intense process of an elongated period of bringing documents, giving them access to our offices, what protocols should be followed? I think these are some pertinent questions which we will have to address as time progresses. Similarly, submission of invoices or other documents, whether physical documents or electronic records, will be sufficed. So whether a scanned copy of that being emailed to them or given on a pen drive or on a Google Drive, whether that will be sufficient. Friends, in this regard, I think the definition of document under the GST law is very wide, and even an electronic record is considered as a document, and therefore I think you would be within your rights that it's not possible for us to prepare a physical file and submit to you, because it might again become a silent carrier, or because we say that even substances can be carriers of this virus. In that type of a scenario, maybe we can actually prepare a Google Drive and share a Google Drive link and say that, look, all the documents are available there. So that is one more aspect which we need to bear in mind. The next is the extent of submission of documentation. As I highlighted, when you look at the audit manual, most of this information, hello, most of this information is to be compiled by the GST audit team and not by the taxpayer. But of course, when you talk about all of this, it's going to be a balancing act at times, because you at times don't want to antagonize the auditors beyond a point, and therefore it's going to be depending on the each facts of the case. You will have to look at how you want to deal with it. Timelines of initiation and completion of audit, we talked about it, that they have to complete the audit within 3 months, but on some pretext or the other they may keep on extending this. And our practical experiences in the service tax audit is it has lasted for years together, and therefore I think that problem is very much there. And when it lasts for more than 3 months, 6 months, 1 year, 2 years, you find that even the internal audit teams which have been assigned, they get transferred internally, and therefore suddenly you find that initially you were having one Mr. A, B, and C who were going to do your audit. So they asked for some information, you gave them information. Now that A, B, C have got transferred, and P, Q, R are the new persons who are going to do the audit, and they don't have any handover, so they don't have the documents. So they again expect you to give all the documents, records. So all the duplication of efforts and things are very much there in this entire process. And I think that's where the last point about the soft skills becomes very important, how you are going to handle this team. And I think that's a very, very subjective process. It is less of law, more of art. And I think with that, I would like to end my talk. I would hand it over back to the organizers to take up from there. Or back to the organizers, please.
Thank you, sir. Thank you for the detailed presentation. Now we'll take up some questions, sir. So I request the audience to put their questions in the chat box.
Ritesh, in the meantime,
Yes.
some question comes in the chat box. It is not my question, but some sort of further information or clarification. I would like to take this opportunity of Gabhawala ji being here. Sir, this audit, how far it is challengeable if anything is found wrong in that audit report, and how it is to be challenged?
So there are two things. One is when you are challenging an audit, or you have to challenge the audit process. I highlighted that there are some loose ends when you look at the jurisdiction or the empowerment of the specific audit teams. That can be challenged at the initial stage of initiation of audit when the ADT 01 comes. However, it's individually you will have to take a call whether you want to do that challenge under a writ proceedings. The second aspect is when you finally get an ADT 02, let's say you have cooperated throughout the process, you get an ADT 02. That ADT 02 does not mean anything. End of the day, if there are certain aspects on which there is a difference of view between the audit team and the taxpayer, it will result in a show cause notice under section 73 or 74. That show cause notice can be duly responded, and there are provisions under the GST law itself which gives you a reasonable sort of a alternative recourse to handle those matters. Typically, when you get a show cause notice, there is a very limited chance of approaching a writ court at that point of time challenging the show cause notice, because the writ court will say that you respond to the show cause notice. The show cause notice does not mean an enforceable demand. You present your submissions to the other party, because there was the first party is the audit team. The show cause notice will become adjudicated by the jurisdictional authorities. So you still have a new person to whom you are going to present your case, and you have that opportunity. And if that opportunity is there, typically the courts are not inclined to intervene. So except on the point of jurisdiction, I do not see a major opportunity to taking the matter directly to the High Court at this point of time.
Sir, in continuation of that, sir, if suppose based on audit report, the jurisdiction adjudicating officer raises some demand, have we chance to get stay or challenge that also?
So as I was highlighting, the issue of jurisdiction is one issue, which will, if you challenge at the time of initiation of the audit, it's a different game altogether. Now, you are assuming that you are not challenging the jurisdiction at the ADT1 stage. You end up with ADT2 and a so cause notice. So, therefore, you have, in a way, consented or acquiesced with the process up to that point. Having done that, the show cause notice is again a contingent demand and it will be adjudicated by your jurisdictional authority. Now, when a show cause notice is adjudicated by a jurisdictional authority, that jurisdictional authority may get information from multiple sources, and audit is just one source of getting an information. And typically, even in income tax, we've seen that if there is a raid, then and there is some information which has been collected, then the officer can act upon that information. So, therefore, after the initial stage, I do not see a lot of role of the court in intervention.
Thank you, sir.
Thank you so much, sir. There are a couple of questions here, sir. I'll just take up one by one. The first one is from Deepak Putra. Sir, one of the audit officer has completed the audit and has issued spot memo. I have given no objection letter, but till now, no intimation of completion of audit is done. What to do?
If the time limit has expired, I mean, in that case, you can approach his higher authorities and ask for a draft audit report or a final audit report. And otherwise, in many of the scenarios, we always believe no news is good news.
Yes. Next question. When professionals are allotted audits, why the department audit is being initiated?
Very fundamental question, I would say. If the professional audit would have resulted in a reasonable tax collection, maybe there was a scope for saying no department audit. But we all know that in many cases, the professional audit is deficient, firstly. Secondly, even when you look at Section 35, the scoping of the professional audit, as we say in Section 35, is primarily reconciliation. So various aspects which a department audit is expected to do, a professional is not expected to do. Many times we take up that responsibility, that's another thing. So therefore, I think both of them stand in a totally different space.
Next question is from K. Kiran Kumar. Sir, through a view on the contractor cases, when to pay tax and when to raise the bill. Bill raised in April 2017 will be mostly released after 3 months. Sometimes it is 16 months. Some of the accountants have filed nil returns and the bills received are of VAT deducted.
Yeah. So I think basically your concern is relating to the time of supply. Naturally, contracting is a continuous supply of service, which will say the moment the milestone is achieved, you are required to raise an invoice and pay the tax at that point of time. If you receive any advance, then also you are required to pay the tax. Of course, if there are subsequent adjustments to this price, then Section 34 will permit you to issue a credit note or a debit note. And those credit notes, credit notes especially, will have to be issued before the September of the next financial year. And that timeline has been prescribed under Section 34. I am aware that this creates problems in some cases, but I think this is an industry issue. You will have to deal with it. One possible view is to look at the erstwhile Service Tax Circular 144, not issue a tax invoice on day one, but issue a statement of work, wait for certification by the client, and issue a tax invoice only post a certification. But this has to be taken with a lot of care to make sure that you have not issued a proper tax invoice on day one, because now with GSTR1, GSTR3B and all those things being there, it may be very difficult to say that I will raise an invoice but not pay the tax.
Thank you. Next question, sir, from BN Sirish. Are audit conclusions appealable when SSC point of view is not considered?
No, because audit observations are merely communications. They do not create a tax liability. I repeat, the final audit report does not create any tax liability whatsoever. If you want to pay voluntarily, you can pay. If you do not pay, they cannot force you to pay. The only thing which will happen is they will issue you a show cause notice, which also is not a confirmed tax demand. That show cause notice ultimately will be responded by you through a detailed response. There will be a personal hearing granted to you thereafter, and only thereafter there will be an order, and only then you can file an appeal. So therefore, to answer it in a very simplistic manner, audit conclusions, the audit reports are not appealable documents.
Thank you, sir. Next question from P. Samamurthy. He's a GC member. Sir. Can audit officer verify present cash in stock or else for the period covered by the notice?
A very important question. In my first slide, I tried to bring out the different scopes of different processes of identification of evasion of taxes. One important thing which we need to know is that audit is a post-transaction review. It is expected to be non-intrusive, and therefore, if today some officer comes, he might have an authorization for an audit for up to financial year March 20. Now, if that be the case, there is no question of verifying today's cash or today's stock. That is not within the scope of the audit process at all.
Next question. Whether the audit report is appealable?
I think I've answered that question. It is not appealable.
Yes, sir. So we have completed with the question, sir. And, I request our past president, CA Murli Manohar Pallod, a session chairman, for his closing remarks. Yes, sir. Over to Mr.
It was a very detailed presentation given by Sunil sir from Mumbai. He has taken us to the audit manual on risk-based, theme-based, everything. He has shown us the picture, what is the criteria behind selecting the audit. And already we started receiving notices for our clients. So it was a very good learning experience for us, everyone. And I'm very confident that each of us who are today participated have learned, and after going through section 65, 66, rule 101, definitely they will be in a position to face departmental audit. And I thanks once again the learned speaker taking us to each based on his experience in service tax, VAT, very detailed what is the expectation of the department, how the SSC can face the audit, and what records it has to keep ready. Because in my opinion, the SSC, while filing the returns, he has to make on what basis is filing the return, what basis is claiming input tax and output tax. So at the time of preparing return, if all these records are maintained, it will be very easy for him to face the audit. With my these remarks, I hand over back to Pradesh.
And thank you so much to our speaker, Sunil Gabhawala ji, for giving the time. And for a formal vote of thanks, I request our Vice President, Nagesh ji, to present the vote of thanks. Over to Mr. Nagesh.
Thank you, Secretary. Is it audible, sir?
Yes, sir.
Yeah. On behalf of the Telangana Andhra Pradesh Tax Bar Association, this is an opportunity to give the vote of thanks to our respected speaker, Sri Sunil Gabhawala ji, Chartered Accountant, for his excellent presentation on how to face the department audit under the GST laws. Speaker sir, thank you very much, sir. After listening to your excellent presentation, most of our doubts are clarified, sir. Thank you, Lord, sir. Thank you very much, sir. So thank you, Murli Mohan Pallod, sir, the Chartered Accountant, today's session chairman, and past president of our association. Thank you, sir. Thank you very much all the participants, past presidents, Telangana Tax Bar Association. Special thanks to Amit Kota, sir, our secretary Ritesh Mittal, sir. Yes, special thanks to our Golden Jubilee year, our team leader, President Sri Ramdev Bhattacharya ji, who is conducting excellent meetings. Thank you very much, sir. Thank you and all. Thank you very much, sir. Thank you very much, Gopalawala.
Thank you so much, sir.
Over to Secretary.
Yes.
Yes, sir. Yes, sir.
Actually, after a formal vote of thanks, nothing should be said. But Gabhawala ji, are you listening me?
Sir, you always speak, sir.
Yes.
Yes, I am there.
Sir Gabhawala ji, we would have loved very much to meet you personally and physically, but due to this pandemic situation, we had opportunity to meet you through virtual mode. So
Yes.
we couldn't facilitate you properly by what we would have done with your physical presence. So we hope whenever you are visiting Hyderabad, you will provide us opportunity to do the honors for you, sir. We'll be very
Definitely,
much
it would be my
grateful to you.
pleasure. At an opportune time, we will definitely meet in person.
Yes,
Definitely.
yes, sir.
In the meantime, I request you all and all the participants to stay safe and stay at homes.
Yes,
Thank
sir.
you, sir. Thank you.
Thank you, sir. Friends, I would like to remind that on 17th October, the meeting which we have missed to spell out in my opening address is on recent changes in TDS and TCS. The speaker is C. Avinash Ravani from Mumbai again. Friends, and tomorrow we have a meeting on issues in tax audit and documentation. The speaker is CA Pramod Jain sir from Delhi, Central Council member ICI. Kindly join in and get benefited. As you know, tax audit quality review board has been established and all tax audit reports are going to be reviewed. So that is very important. I request all of you to join in and request all others to take advantage of this. Thank you, Sunil Gabhawala ji and all the participants, my dear. I thank one and all from my side. Thank you very much.
Thank you very much, sir. Thank you very much, sir. President garu, Firoz, Samamurthy garu.
हो गया मीटिंग